Hello and welcome to Realty Buzz, your weekly real estate reckoner. This is Mansi Dave and let's take a look at the show. First up is a report on the current sales in the top 6 metropolitan cities, which are fluctuating by quite a margin. Raising the flag as the best performing market is Hyderabad, with a 46% year-on-year jump in home sales, followed by Pune and Mumbai. The National Capital Region and Chennai, however, seem to be lagging behind. Take a look. In the National Capital Region, home sales fell 37% on a year-on-year basis. In Mumbai, they were up to 8%. Hyderabad had a 46% year-on-year jump in home sales. In Pune, sales rose by 22%. In Bangalore, sales were up by 5%. In Chennai, it went down by 40%. On a quarter-on-quarter basis, sales in Bangalore were up 31%, while in Chennai and Mumbai, they were up 24% and 25% respectively. Sales in NCR were down by 27%. Property prices in Bangalore, Chennai, Hyderabad, Mumbai, Metropolitan area, NCR and Pune remained stable both on year-on-year and quarter-on-quarter basis. Among all markets, NCR had the highest unsold inventory at 321.68 million square feet, which will take about 71 months to get sold. Mumbai Metropolitan area was the next with 192.27 million square feet that will take 46 months to be sold at the current pace of sales. Bangalore was among the best performing markets among the larger ones with 152.43 million square feet that will take 27 months to sell. According to Lises for Us, new supply in the quarter rose 21% over the previous quarter, and 36% of the new supply came in the cost range of Rs 50 lakh to Rs 1 crore, followed by 29% in the range of 25 lakh to Rs 50 lakh. Two-bedroom unit constituted 36% of the new supply, followed by three-bedroom units at 35%. Bangalore and Mumbai metropolitan area constituted 31% and 28% of the new supply. There is more news of the 6 important cities that Mumbai NCR, Bangalore, Chennai, Hyderabad and Pune, where developers are still restricting new residential project launches owing to an oversupply situation over the last 8 quarters. Take a look. New launches have nearly halved in the January-March 2015 quarter over the same period last year, even as sales volume has remained steady. The FICCI Knight Frank Real Estate Sentiment Index, however, expects new launches to improve marginally over the next 6 months. On the pricing front, the report suggests that majority of the developers and financial institutions foresee prices to remain stagnant in the coming 6 months on the back of subdued demand. According to the report, a majority of the supply-side stakeholders have said that there will be a substantial increase in the new office space supply on the back of high latent demand. They have also expressed their optimism with regards to rental appreciation in the next 6 months. The present initiative towards creating a business-friendly climate and the push for the Make in India program have lifted the stakeholders' sentiments, particularly in the office market for the coming 6 months. Delhi and Mumbai are the big drivers of real estate in India, and the recent political uphill and the contentious development plan have weighed heavily on the sentiments of these cities and zones. Next, we have news on India's largest realty firm, DLF, who are likely to raise a massive sum as part of strategy to replace costlier debt. They also plan to launch their first real estate investment trust this fiscal to monetize its commercial assets. Have more on that. DLF plans to surface Rs 3,600 crore this quarter through the issue of securities backed by its IT small economic zone. This step comes in the wake of replacing costlier debt. Further, their first real estate investment trust is also on its way this fiscal to capitalize its commercial assets, likely to be launched in the next 2 months. They have been quoted as saying, "We are actively working with rating agency and investment bankers for the commercial mortgage-backed securities issue." The company, however, was waiting for the Securities Appellate Tribunal judgment on the SEBI's order banned DLF from accessing the capital market for 3 years. Last year, the company had launched the country's first CMBS. It raises Rs 900 crore in 2 rounds of CMBS against 2 shopping malls in the Next Capital National. DLF net debt stood at Rs 20,336 crore as on December 31, 2014, of which about Rs 14,000 crore pertains to rental arm. DLF has a land bank of about 300 million square feet, of which about 50 million square feet is under construction. Its share price went up 1.25% to Rs 138 apiece on the BSE. The market cap stands at Rs 24,644 crore. So this is all with this segment of Realty Buzz. We'll be back with more on this. Till then, keep watching Spin TV. Goodbye. Take care.